it's getting more and more possible to build a great business that's not a venture business. And what you've built is built so quickly, which is awesome on one hand. But on another hand, if you can build it that quickly, so can someone else. And so your competitive landscape, if you find a great niche, is actually going to be bigger than you think. And so I'm just seeing more and more founders talking to us where actually maybe just build a great business. Like, why the hell do you need venture capitalists riding the shit out of you, where you could build a great little business that produces this thing called profit, like can actually produce you cash, and then you can go and buy things and you can have holidays and you can have a much better life than the poor bugger on the rat wheel that has a very low statistical chance of being successful.
But then after chatting today, I think it ties back to like, what is the most important thing that has to be done? And let's say it is growing revenue. So then anything we do has to tie back to that. And then it makes sense, because otherwise, like, I'm getting caught in this loop, exactly like you guys. Like, we're just chasing the same thing. It feels like a rat. Like, we're just going forwards and back.
As a founder, you that constant frustration of we're not moving fast enough, we're not doing enough, looking over at what others are doing and the rate they're doing it at, what their headcount is in comparison to yours. So I understand that entrepreneurial energy. It does. The reaction is not surprising though for the employees, given what's happening at Atlassian and elsewhere.
So I feel like the odd one out. You two are in the Canopy merge, and I'm
repping. It's good merch. I'm learning from Ray Long. This is how you get investment outcomes.
Yeah. Well, did you see his post this morning? He says, let me just find it. His post says, Rain, why do you still look so relaxed in the SaaS apocalypse? Here's why. And it's Jesse Crichton, who's the GM of North America for Heidi. Let me just share my screen. Heidi's gone from 0 to 50 mil and it's accelerating. And what Jesse said in his post, Heidi went from 0 to 50 in 24 months and the curve continues to steepen. We continue to validate our view that the world and our convictions about how AI will be used in healthcare. There's no slowing down the Heidi train. And yes, we've heard every bear case. First, it was PLG doesn't work in healthcare. Then it was you're just an LLM wrapper. Then you're dead on arrival when it comes to medical records. He says, I'm taking orders for the next bad take in the comments. More importantly, I'm hoping this here graph acts as a flight trap for the best talent in the world. We're hiring fast across every function.
How good is that? Traction trumps everything.
I'd be calm if I was Rain as well.
Yeah.
But trying to find the best talent, this is probably the way to demonstrate a little bit of FOMO. Come and join us, because we're going to we're going to the moon.
Yeah. Good time to be recruiting some talent, as we'll be talking about later too.
Well, when I went to the dentist for my stupid tooth, not the dentist, like the oral surgeon or prosthodontist, or I can't keep up with these words. They all sound like dinosaurs to me.
I was going to say, was it paleontologist?
Yeah, paleontologist. Yeah, that's it. I went to go see the Scientologist, and anyway, he was using Heidi, and he didn't even bother like finishing his words or his sentences, and he just mumbled. And Heidi still sorted it all out and made it come out good at the other end. So it's some good tech.
It's really good tech. The GP asked me the other week, would you mind if I use AI as a note taker? I'm like, please, can you use AI? Because I probably trust it more than I trust the doctor at this point.
Well, how we been? Was it last week we did the drinks on the Goldie, or this week? I can't remember.
That was last week. It feels like a fortnight ago, but it was last week. That was awesome. 110, something like that, rocked up, and really good vibe. It was great seeing everyone. And it went really fast, but we stayed there for a fair while in the end.
You know, it's great to see such a turnout, and a shout out to our partners in that event, Cohort Spaces, Ben and the team, who run a really great ship there supporting entrepreneurs.
Yeah, a lot of new faces too. You missed a good one, Jack.
Yeah, I saw all the photos. It was good to see a few tribe shirts getting around as well. I saw Bades had his tribe test.
It is awesome when shareholders wear your kit, hence Jack and I. Canopy.
But that photo that Bades put up, and I still think I was probably on my tippy toes to reduce the gap between us by a foot. But Bades was the head of entrepreneurship at Bond Uni, and there's something in the today's schedule where we'll discuss Bond Uni.
Yeah, true. But yeah, it's great to see the Gold Coast ecosystem flourishing. Like, to Baden's post going back, it's actually about 14 years now, when it was just kind of the grassroots kick-starting to what it is today. And full credit to everyone down there that's driving that community. It's vibrant.
Well, let's jump in. A slight segue between things. At the drinks, I met a guy called Jason Fielding, which, Aaron, I think you may have met. And he and I were having a chat. He was head of voice capital at Main Sequence, where their mission, looking at LinkedIn here, was to bring cultural tailwinds from music, film, sport, fashion, and film to the deep tech startups addressing big challenges that the planet faces. And then he's spun out of that as a co-founder of Voice Capital outside of Main Sequence, it seems. And so what he was talking about is putting a lot of effort into going and raising money from celebrities and famous people and sports people to get them into deep tech. And so that was a fascinating conversation. And then I saw in the AFR an article that said Manny Stool is the head of Moose Toys, and through Adesys, I had some conversations around them because Manny's stepson is a YPO member. John Hancock and others like David Baxby have invested in a fund called the Global Talent Fund, which the vehicle hopes to replicate the success of Rhode, the skincare brand founded by socialite Hailey Bieber, which was sold to Elf Beauty for $1 billion last year, or George Clooney's tequila that was sold to Diego in 2017 for $1 billion. Among the investors, it says, which is targeting 100 million, Stool businessman John Hancock, who's the son of Gina Reinhardt, as well as the former Virgin Group chief, David Baxby, who's now the founder of Coogee Capital. And I'll get back to David in a minute. The fund will be run by Investable, an early stage venture capital firm that was among the first backers of graphics design, Canva, and workplace safety business safety culture. Investable has then partnered with specialist advisory firm EMT Partners, who's co-founded by Trent Blackett, to develop a strategy that includes investing into 10 companies at a time. So, yeah.
I love the model. It reminds me of kind of the vibe of Tom Waterhouse with his fund, how you lock in distribution, or you've got these opportunities for distribution, and then you pick the ones that you can leverage in that way. I think it's a great model.
I think it's partly the future of small funds. I think this is just another sign that generalist that doesn't have some kind of unique feature to differentiate, investors are just not going to get involved in. Whereas here, they seem to have a pretty tight thesis of who their LPs that they're seeking to raise from and exactly the kind of operating model that they're going to try and create returns out of.
And you can see from an LP perspective, others wanting to be part of that community. So I think they can play that community angle with their LP base as well, which is just, as we know, like, that's genius because this is a relationship game.
Yeah, I think it makes a lot of sense. One thing I would say, like, I think, like, in theory, it makes a lot of sense, but then in practice, like, actually getting access to invest or co-invest in these celebrity products, I think would be harder than it is on paper. And then the other thing I'd probably just want to make sure is just like, there is some skin in the game, because I know it's like, it's so easy. These guys are spinning so many plates. It'd be so easy for them not to focus on the product. But when it goes right, it goes really well because they have distribution. But then there's also so many examples where a celebrity's pushed something where it's flopped.
Yeah, I guess you're putting your hopes in the manager that they can find the right celebrities, that they're going to partner with the right deals, and that execution is going to matter.
Yeah, definitely. But I'd just love to know, like, how do you get access to that? Because I don't think it'd be easy. Like, how do you get into the top tier celebrities to then push a product like co-investment?
It's a good question. Manny Stool and David Baxby, amazing operators. I would have thought, though, David, with his prior life as the Virgin chief executive, although he was more focused from memory on aviation, and then he went to Wesfarmers in their industrials division. But maybe someone like David has unbelievable networks.
And like Manny probably have a great example. Like, he's done a collaboration with Mr. Beast. So he's probably seen firsthand the power of putting a brand attached to the toys and just see it be an absolute rocket ship.
Yeah, totally.
Well, in this article, so I've just scrolled down, it says, I think the mix of celebrity or talent and private equity type makes a lot of sense. With Trent's background doing this with Chris Hemsworth, I feel that this is a great opportunity. This forms a growing area of interest for asset allocation. And so Trent seems to have got some form in this world of bringing together celebrities and private equity to make things happen.
Yeah, well done to Trent. And just on David Baxby, like his younger brother, Matt Baxby, also does incredibly well. Like both of these guys, Matt Baxby was running Virgin Money in Australia and he's now CEO of Revolut in Australia. And so there's some pedigree in that family. Yeah.
I did not know that. Well, I got the absolute pleasure to spend some time with David, which has then led to a few combos. So with Coogee Capital, they were looking at the childcares, and it just so happened he flew in and I was in the boardroom with them, and they went off to look at some centres and he hung around, and I got to have I think what turned out to be, 90 minutes in the end, which ended up just being a great conversation because it turns out we have some common interests in some things. And it's funny how small the world is. Bade's being, the head of entrepreneurship for so long at Bond. David is now the Chancellor of Bond, which is the first alumni to become Chancellor, which is just an amazing story in itself. But yeah, really a really genuine guy and a very action-orientated guy. So with the unbelievable and tragic events of the Bondi shooting, his wife and daughter, while he was overseas, was actually stuck in the toilet of the cafe during the shooting. And he was on the phone to them, which that just sends shivers down my spine. I mean, just imagine being in that position and having to deal with that. But I might screw up part of the story. He ended up talking to Albanese about what needed to be done and was one of the chief people driving a move towards a royal commission and a shitty situation. He didn't just sit there and throw hands up. He actually got on his bike and brought together his networks and pushed forward for something that I think takes a lot of guts to put your head above the parapet in that manner.
Yeah, absolutely.
I'm going to hit him up to come on the investor focus of the podcast. Actually,
that would be epic.
Just come to my mind.
We should get Matt too to talk about Revolut. I was just looking. He's actually a partner at Revolut now, out of the UK as well. So as well as running the APAC business.
Yeah, well, I think with the right managers and the right thesis and the right people involved, you can do quite well out of this game. But just a reminder quickly, because we'd spoken about Federation Asset Management before, who managed to somehow put 65% of a fund into one company called Sendle, which went broke, which I still can't quite get my head around. But in Joe Aston's publication, Rampart, there was a little article that starts with Federation Asset Management is reformed, according to a letter to its investors signed off by the CEO, Cameron Brownjohn. The firm's come to Jesus moment arrived, ever timely, after it stupidly sank 65% of its flagship evergreen fund, Federation Alternative Management 2, into logistics company Sendle, which is now in liquidation. In the letter, Brownjohn conceded Federation made a bad investment, which will go down as the most searching piece of self-criticism in the history of funds management, and that the firm is focused on doing better for its clients. So I sent you guys the letter. Maybe we put too much effort into things because our very basic comms to shareholders, even during the good times, is longer than this. So this is fits on an A4 only because they space every sentence 2 times. But it says, we've listened to your concern. We've focused on doing better for investors. I wish to confirm Federation shareholders and team members have lost money alongside our investors on the Sendle investment. That was number one. That's
what they led with.
I don't know how to categorize. It's almost I don't know. Is it victimy? It's just the weirdest thing to lead with.
The energy of it for me is, I know you're all hurting, but we are too. Yeah. It's almost a bit dismissive.
We lost money as well. We attempted to invest in a way that would profit our investors, not ourselves. So again, that's this self-justification-y thing. we've agreed to write off performance fees that were otherwise provisioned as payable to us on other investments in the subject fund. That's probably the least you could do if 65% of your investors' capital is fucking burnt. We're introducing a concentration limit for further investments of 30% of the relevant funds. Like even, yeah, I mean, I probably don't know enough about their business, but if they're investing in things like Sendle, that is venture. Do we know any fund in the venture phase that would go to that level?
No, and interestingly, they're an evergreen fund. So structurally, this doesn't make sense to me. Even saying now we have a concentration limit of 30%, that's a high limit.
Yeah, maybe I don't understand. The article says the painful irony is that evergreen funds are designed to be a superior product for investors. Unlike traditional closed-end funds, which draw down capital over years while charging fees on money not yet deployed, evergreen funds put investors into a pre-existing diversified portfolio from day dot. No capital calls, no cash drag, no J-curve. The negative returns that plague closed-end funds in their years while fees are charged on undeployed capital.
The irony in that one, we put you into pre-existing diversified portfolio. They had 65% of the fund in one entity. That's not a diversified portfolio.
Yeah. I will do, just for our Tribe and our Nexus fund, we don't behave like that. We call down the capital over 3 years and we only charge our fee on drawn down capital.
Yeah.
The article does have a little crack at 5V in here. It says 5V Capital's Horizon Fund sports the most explicit non-letting language. So earlier in the fund, it talks about how the way some of these funds are set up is that a loss from one can't offset against the profit of another, meaning that the article's effectively saying the manager doesn't have any consequences for losses, but makes money irrelevant of what the outcome is. And he says in 5V's performance fees, the firm's staple trustee states it cannot be a negative amount, nor, as the D continues, can they offset or reduce performance fees from another investment. It would be remiss not to note that 5V charges the highest carry of the three funds in question, 20% above an 8% hurdle applied in respect to each investment on top of a 2% annual management fee, lest anyone feel shortchanged. 5V may also retain deal fees, director fees, and monitoring fees. I felt that was a little unfair of, maybe I don't understand the other funds, but 20% over 8% is not only standard, it's aligning shareholders, and the 2% annual management fee, especially on small funds, there's a reason why we're driving Toyotas.
Yeah, that's an unfair criticism of 5V when those figures are actually the industry norm. They are the mean and the median. And we see some funds that have a 30% carry above a 6% performance hurdle. Some of the top tier funds actually have higher carries. So, and to your point, Don, if you're an active manager like us that does a lot of portfolio support, that 2% and it doesn't cut mustard. Like you're not washing your own face until you're at least at 60 mil.
Two people on this podcast are having to wear free merch to get through. Can't even afford our own bloody jumpers.
Yeah, exactly. So
well, I don't think it's a fee situation. Like this is they over-betted into one company and the company folded.
Exactly. Bad investment decision, but hence why let's criticize what others are doing.
Yeah, this one pager, Federation and team members have lost money. So we discussed that. We attempted to invest in a way that would profit our investors, not ourselves. I have a feeling the sunk cost fallacy came in where humans that struggle to admit they have fucked up, they chase their bad decision instead of just admitting. To get to 65% of a fund like that, I don't understand how you would ever be trusted again. And to have a one-liner that says, we're adding additional oversight to our investment process. Okay, so what you're saying is you are not competent. So we are going to add additional oversight to babysit us. And then the final line is we've structured Federation's team. Well, what does that even mean?
But to your point,
anyway.
Don, about, I mean, if that was us, we have done a post-mortem on a previous investment. But for me, what's missing in here is identification of original causality. Like what was the thinking? What were the structural issues that led to that decision making? And how has that changed so that there's not another not great decision that's made going forward?
I think it was at least 15 pages long or something, wasn't it?
Yeah.
Nothing that comes out of us is short. Anyway, I think you got to choose your managers. And speaking of things shutting down, Toby Thomas Smith, we've spoken about Kiki a number of times on this podcast, announced after 7.5 years, over 5 million raised in 4 countries, we're finally shutting down Kiki. This has been the hardest decision of my life, but now is the time. I know this may come as a shock, he says. From the outside, things have looked like they were going well. Yeah, that's interesting. But the reality is that things have been really hard. We have been destroyed over the last few years, and unfortunately there's no option but to give up. From the media attacks to moving cities 4 times to being kicked out of New York to rebuilding the team multiple times, I just can't take it anymore. Anyway, it goes on and on. Here's the problem. It was April 1st yesterday, so this whole post is an April Fool's post, which he then ended up getting absolutely slammed. Simon Thompson, editor of Startup Daily, said, "My favorite April Fool's joke was a founder announcing on LinkedIn that he was shutting down his startup. Like many of his predictions, it was wrong, but sometime in the next 12 months, he'll be right."
I love Simon so much. That was good.
Jesse Wu weighed in. That company has the worst comms instincts I've ever come across. An April Fool's joke about shutting down your company that the majority of people seem to think is sincere is such a... okay. Yeah, no, I won't repeat that word. But Jack had shared it, and I thought, hang on, is this serious? But Jack, you found that Sam Wong, who's the partner of Blackbird, who's led this, she had actually put the comment on, "Too soon, Toby, too soon," which then I think highlighted to us that it was actually a joke.
Yeah, I think we all thought it was legit when we first read it, which is funny in itself. But yeah, man, Toby must have thick skin because he cops it.
I think it'd be fair to say he definitely sees the world differently to the rest of us, or he operates differently.
Yeah, definitely. And I also think like the saying all publicity is good publicity. I don't believe that. Like after seeing this post, like he's just copped so much flack.
Yeah, to what benefit?
Yeah, exactly.
Well, speaking of founders copping flack, Cliff from Canva often cops it. And in this article from Bronwyn Clune, this is the new bar. Cliff Obrecht sparks Canva job cut fears since deleted Slack note. She says Canva co-founder Cliff Obrecht has an urgent message for staff at the design software last week. This is the new bar, he wrote in a Slack message. If we're not working at this velocity, we're not going to be competitive. In this message, Cliff had linked to a viral social media post highlighting that AR market leader Anthropic's rapid product development velocity. It had shipped 73 releases in just 52 days between February and March. He also attached a screenshot of Google search showing the company behind Claude employs between 2,300 and 2,500 people, with the figure highlighted. Canva's workforce is roughly double Anthropic's. Staff took the notice to imply that half the workforce could be doing the same job and the cuts would follow. The fear then spilled out into the anonymous workplace platform Bind, where the post reflected the widespread alarm about redundancies. The post was quickly deleted following staff feedback, and Canva has since confirmed that there's no layoff planned for staff. But the episode highlights the anxiety brewing in the technology industry over job cuts. What are our thoughts?
Well, on the one hand, I totally feel that energy. Like we know this, right? As a founder, you that constant frustration of we're not moving fast enough, we're not doing enough, looking over at what others are doing and the rate they're doing it at, and what their headcount is in comparison to yours. So I understand that entrepreneurial energy. It does. The reaction is not surprising though for the employees, given what's happening at Atlassian and elsewhere. So it was an oversight. I think there's some other golden...
I feel a bit bad for him. Like we're in the middle of, literally for some companies, Armageddon.
I agree.
And if you can't point to the pace of others and I mean, you can't be happy clappy all the time. And to me, it's not a bad point. Anthropic is half our size and it's delivering these items. I just feel a little bit bad for him that yes, some companies do have to move into wartime, otherwise they're not going to be able to maintain their vow.
I totally agree with that. I think just the delivery is perhaps what I'm referring to. But for me, what I was going to say, that the contrast, the response to Atlassian and the criticism of the founders in not doing enough to take action earlier. And here we have a founder who's taking action early, but we're still criticizing them. I did have a hint of, man, can a founder ever bloody get this right? You're just always going to suffer criticism. The founder has to do what's in the best interest of the company.
But yeah, that's why I think like he has got it right here, Aaron. Like I think it's not you can't satisfy everyone, but he's doing his job.
The last person to try and make everybody happy got nailed to a cross.
That is true.
Well, it is Easter as well. We've got to bring in some Easter vibes. To me, this is like a pre-step. It's like there's some patterns that I'm trying to make you all aware of, and I bet you in a company of that size, there will have to be a range of people that are not pulling weight, and there'll be all the excuses as to why we can't do certain things. This is the kind of energy of a founder that doesn't want to have to go down the path and is pointing out a few things. Now, some people find it distasteful to do things in a certain manner, but when you're at wartime and shit's coming at you, you can't be all beer and Skittles and roses and hugs and yeah.
Yeah, I agree, Don. I actually really like this article because I can relate to the uncertainty that everyone's feeling in the tech sector. But that's why I actually have empathy for Cliff. Like he's got to react like this. Like only the paranoid survive. Yes, Canva probably have a lot of cash on the balance sheet, but like there are so many people coming for them, and there are so many other platforms now. Like they need to be moving, they need to be shipping at the same velocity as the best in class. And I think what Cliff is doing is you can't knock him. That's what everyone else would do, right? Like you're just trying to push the team.
Blockbuster had a lot of cash at one point. So did Kodak. So did Nokia. So did all of these companies. Those things make you fat and happy. And like you say, only the paranoid survive.
There was another point in the article too about questioning whether the increase in productivity on the dev side purely means a reduction in headcount. But I think for me, one of the things stood out strong in the US mission, this focus on capital effectiveness. Like if you can drive growth and if the AI tools give more time for more growth, so long as it's an effective use of capital, it doesn't necessarily equate to lower headcount. Like I think the concept that, we'll just do the same in less time, there's still the need for growth. It's just, is headcount the most effective way of doing it?
I agree. But I also know that a lot of companies became bloated during COVID hiring spree. And at that part of the cycle and that part of our technology stack, we needed humans to do the stuff. And so there's like a double whammy of still having a hangover of bloated, especially middle managerial layers. And so when you look through some of these numbers, I think a lot of the AI job cuts, it's actually unfair to call it AI. It's bloated management that when you then use some AI to get better reporting and better workflow and a few better other things, it's like a double whammy.
Yeah, no, I do agree with that. Look, Musk could have been ahead of his time when he acquired Twitter and laid off most of the staff saying they weren't necessary. We haven't mentioned Musk in a while.
Don't make me angry. I think that's right. He was probably a bit ahead of his time, but that's the most positive thing you'll get out of me for that individual for now. AI and partnerships. It was announced that Anthropic is partnering with Xero. And Hugo Mathers from Capital Brief says Xero may have found a path out of the SaaS apocalypse with a deal with Anthropic. Less than 2 months after the product update by Anthropic, fears of the worldwide SaaS apocalypse, an impending doomsday event for traditional software and as a service companies, the same AI startup announced a multi-year partnership with one of the biggest software companies on the ASX. Now, in this article, it talks about when accounting platform Xero was the worst hit stock on the ASX 200 on the day that Anthropic's fateful reveal in February occurred, with its shares crashing 16%. Last week, it officially joined forces with its would-be disruptor. What this article's talking about is that it says it looks like Anthropic has taken a view that it doesn't necessarily want to be B2C and it would rather be B2B provider more broadly, which makes sense. But I think it's interesting. There's a lot of concern that Anthropic, ChatGPT, XAI, whatever, how much of the surface area are they going to go and take in terms of the end products? And some of the conversations have been, will Xero and other products just become a feature of a broader platform? By them not doing that and just being the engine behind some of this stuff, I wonder if Anthropic and others are now sowing the seed to their commoditization in the future. Because if you're making a decision, I just want to be the B2B back end, if you don't build in switching costs, then what stops Xero just partnering with OpenAI in the future or another one in the future? And then once this bubble bursts a little bit, a commodity product subject to competition with a zero marginal cost, the marginal profit always goes to zero. I just wonder if these big LLMs, by deciding not to have the B2C or the front end fight, are sowing their seeds to margin contraction in the future.
I think so. I totally think so. It was interesting, actually. I was in the AICD offices the other day working from there, and there was a person next to me who referenced this announcement, but the way she framed her understanding of it was, Xero's just acquired an AI company, so they've solved. She was chatting to someone, the way she was framing it was, they've solved their existential crisis. And it was just this weird take on this. And I think this is where we're in this privileged view. Like some of the commentary here around, from the investor perspective in that Capital Brief article, I totally agree with. I don't, is this even newsworthy? But it is interesting how others take it.
Are you particularly surprised that you didn't get a relevant hot take while sitting in the AICD offices? Like that's the bit I'm trying to...
Not surprised, but it is that good reminder of the world we live in versus everyone else. And yeah, it is a little sad.
Jack?
I just, don't really have an answer here. Like, I don't know what it's going to look like. Like these LLMs could go B2C or they could go B2B. And I still think it's too early to know. So like, even if they do a B2B partnership, I think if it doesn't work on, like if it does become commoditized, they pivot and go B2C. So I think time will tell. But I think Xero, they had to do something, because I'd be quite worried if I was the CEO of Xero, seeing the capability of Claude Code and co-work today. So I think something had to be done. They couldn't just put their head in the sand. But I don't know if it is going to be the right call, and I think time will tell.
Yeah, I think someone like Anthropic surely must look at the moat that someone like that has, which is the accountants. Like good luck getting an accounting firm to change core platform when their poor clients like us just have to cop the price rises. Like it's going to take a long time before an accountant goes, oh yeah, I'm interested in saving my customer a bit of money. Said no accountant ever.
But I mean, Anthropic, isn't this the exact playbook we would say to a startup that wants to disrupt an industry? If you want to replace accountants, trying to get the end users when the accountants are on those platforms, a different platform, is really hard. But giving a software solution to the accountants, which ultimately then does away with the accountant. And that's what I can see here is, to your point, Jack, Xero had to do something. But if Anthropic now has all this data, all these insights, the end user is eventually building trust that this is actually Anthropic. And at some point, Xero becomes relevant in that. Like, I don't know what else Xero could do, though, other than investing massively in their own technology. But even then, is it just a futile game?
But yeah, this sort of goes back to like I was telling you guys, my friend Jed, he had a copy of one of the large proprietary companies, like the ASIC PDF, doesn't read P&Ls or any of that. So he just uploaded it to Claude, one-shotted a dashboard, and then it just totally visualized the company's P&L, like explained everything, even added all the extra commentary. That capability is what we would pay for a standalone SaaS tool to look after our portcos. But that's like, Xero is nowhere near that. Like Xero is just inputting data to spit out the PDF. That's so far from doing anything like that. So like, who knows what it's going to look like? And will Anthropic need Xero? Like, I think time will tell.
And if you look at the tailwinds of what's happening, for the majority of humans that are on PAYG or retired or whatever else, it's soon going to be direct connection straight to the ATO. Like you will be able to just opt. So that's going to take out a whole chunk. And then for a whole lot of small businesses, to your point, Aaron, I think if you have the right system that has the AI that does all of those things and you've got a reasonably simple business, that's going to be straight through processing to the ATO. And so, yeah, I'd want to be, if I was an accountant, if AI continues to progress in the same manner, I think they have the same problems that lawyers have. I think lawyers have bigger problems because a contract's a contract. But that all dovetails a little bit into some of the themes of the week. What do you guys got?
My theme of the week is balancing experimenting with AI versus getting outcomes. Like going back to that conversation we were having the other day, and Jack, your point around it, like what is the actual beneficial outcome that's coming from all of this? And feeling, do have this, what was it called before the Claude hole? There was something else as well, but this sense of is my use of time on experimenting with AI and building out all this stuff actually being as effective as it could be? And I'm 99% sure I'm not nearly as effective as I could be. But you have to be in it to learn it.
I was saying to someone else yesterday, one of the things with my brain, it just can't help but to go complex. Okay, we can do this and this. And we were talking yesterday and we're talking about co-work, and I'm sitting there going, all right, what we need to do is just focus on the missions. And if we just try and AI the entire mission from lead generation to nurture, and we can get these things in place and it can find these customers, and because every additional person we get onto a mission, the gross margin is quite good. And where Tribe is at the moment, we really need these missions to be progressing. And so I'm off there. And then Jack just goes, why don't we just get like the top 10 list of people that we want to come on the missions and just call them and tell them we really want them to come on the mission? It's like,
yeah, why don't we just call them and just convert 5?
It's like the ultimate midwit. Here's Don in the middle, fucking off with the fairies. But like at either end, it's just like, pick up the 10 people that you want to come and tell them why you want them to come. And if you believe in your product, just sell it. And then there's like 4 hours done and we can get on with building a fund.
Yeah.
But I do think I totally back funnels, all of that. But I think that's after we get the low hanging fruit. And I think the low hanging fruit is a phone call.
Yeah, totally.
And then once that's done, like we've got to become more like, professional.
The problem is some of the stuff that I've believed is low-hanging fruit hasn't turned out to be, and then you get chiseled down with, oh, that didn't work, and then you're on LinkedIn seeing all these AI amazing stories where I was on the toilet using Codework and I've coded this thing and now I'm a billionaire, and you fear you're getting left behind if you don't get on the bleeding edge. And then Jack says, why don't we just pick up the phone?
Oh, it's so true. I am looking forward to a time when we have genuine low-hanging fruit. That'll be bloody awesome.
Well, we do have low-hanging fruit, but often it's gone rotten.
Yeah, Aaron, I think my theme of the week, same as yours. It's not a cop-out. It is the same. And like the combo yesterday did hit home for me. But then after chatting today, I think it ties back to like, what is the most important thing that has to be done? And let's say it is growing revenue. So then anything we do has to tie back to that. And then it makes sense, because otherwise, like, I'm getting caught in this loop, exactly like you guys. Like, we're just chasing the same thing. And it feels like a rat. Like, we're just going forwards and back. And it's sort of what Ash was touching on. And in her role, it makes sense. If you're an AI consultant, you probably have to know every new feature of every model. But for us, it doesn't make sense. And it's just like, does what we're doing give us the outcome to drive X better? Like, that's what we have to realize. And if it's not, it's like we're just doing shit that's not helping us and we're causing us to do more work.
Yeah, totally agree.
Yeah, and for me on the portfolio side, it's getting the time to finish that little tool. Because even yesterday with 2 portfolio support conversations, in the back of my mind, it's like this conversation would never have to have occur if the system was there for them to go and do the thing and take the action. Whereas I'm living in the past, man, of being that human in the loop. Whereas I can absolutely solve that. But then that comes back to one of mine, and I've got 3 for today. It's just falling behind because the short term kills long term. There's a few short term projects on my plate that won't be there one day, but they are there now, and you get caught behind. Another theme that's come up quite a bit I think it was South Start, then our drinks, and then some of our pitches. I think AI is really driving this issue that it's getting more and more possible to build a great business that's not a venture business. And I think we're getting better with our calls. Although yesterday we did have a bit of a cranky, cranky fella on the other line when I sort of asked some of this stuff. But AI is making it, I think, easier for the right people to build great little businesses that aren't ever going to be venture businesses. And that, yes, you should back great founders that often go after really small niches that can then tilt to some other things. But if your niche is so niche and it's hard for us to even see where you would tilt, and what you've built is built so quickly, which is awesome on one hand, but on another hand, if you can build it that quickly, so can someone else. And so your competitive landscape, if you find a great niche, is actually going to be bigger than you think. And so I'm just seeing more and more founders talking to us where actually maybe just build a great business. Like, why the hell do you need venture capitalists riding the shit out of you when you could actually do better potentially?
Do you guys feel like that sentiment is starting to hit home? Like that like even second-time founders are starting to take that route?
Yeah, I think for some, I don't think it's the second-time founder that's the problem. It's the first-time founder that has pattern matched to themselves that in order to achieve this result and I must follow this path, but actually your conditions don't accept it. And so you're then getting frustrated talking to people like us and burning time and wasting time where you could build a great little business that produces this thing like we discussed yesterday on the call, this thing called profit. Like, can actually produce you cash, and then you can go and buy things and you can have holidays and you can have a much better life than the poor bugger on the rat wheel that's trying to make a whole lot of LPs happy that has a very low statistical chance of being successful.
You just reminded me of the founder that I was having a session with last week who had his co-founders were connected to the KGB. And because he was talking to investors, he had to get them off the cap table. and I just said, there are other problems in the business as well. I'm like, why are you going down this path of raising capital? Just keep the KGB people happy. Don't push them off the cap
raise
table.
their money.
Yeah,
Brown
exactly.
paper bags.
And then flowing out of that, another theme that constantly keeps coming up is valuation. And a little while ago, 80% a year growth was bloody epic. It isn't anymore. And if it's decelerating, you are not going to be in the 10x club. And if you don't have a really compelling AI story, maybe there are other investors out there that will invest at those multiples. But as someone that needs to go and sell each deal to other investors, you got to be mindful of what's ahead of us.
Yeah, they're good ones. Timely.
All right, well, let's get into some charts. So for those at home, this is a chart of Australia, New Zealand, UK, Germany, Italy, China, France, USA, South Korea, and Japan in terms of number of days of fuel stocks. And Australia, out of all those countries, is the lowest at, 30 odd days. Japan is at 250. South Korea is at over 200. I just fear that Australia being the lucky country, we're going to be the last generation to experience that. And certainly my kids, when you have a look at the lack of political will, the focus on wokeness, the inability to bring change, these are sovereign decisions that are being made, and we are so reliant on other superpowers that are becoming more and more erratic. And it's wonderful that they've gone and, for some people, halved the excise. But when you're dealing with an inflationary issue, is it a good idea to reduce the price of the thing that's driving the inflationary issue? Like, the cure for high prices is high prices, right? You've got to be able to pull back demand. Like, even me at the farm for this weekend. For this weekend, going out to the farm with 20-something people, I would take 80 litres and I would just burn. I would just run the generator, to hell with it. This time round, my brother-in-law has created what's called R2D2, finally finished the battery system. And my goal is to spend zero on any petrol, and we're going to live within our means. We're going to shower at certain times. We're going to do things at certain times. I'm pretty sure we're going to be able to get away with spending zero on petrol. And that has been driven by this huge price spike. Now, when you go and take away some of that, and then you put more of a hole in the government balance sheet that's already fucked, populism is just a problem.
Totally agree. And the irony of it all, with that inflation, it's likely interest rates will go up. But yet here we are reducing the excises on fuel to drop those prices. It's just that none of it makes sense. And this is back to your point before. Like we are devoid of leadership in this country. And the things that we expect government to be taking care of, like national security and sovereign supply chains and everything else, it's not happening.
So anyway, keep your passports valid. So this is a chart of the national fuel price. So you can see Easter last year, diesel was $1.85. It's now, this is an old chart. You can't find diesel for less than $3.20 at the moment. This chart is $3.28. I always remember diesel being less than petrol.
Yeah, it was. My first car, an old 69 Land Cruiser, I could fill up it was like $40 max.
God, does it cost you $4,000 now to fill up a 69 Land Cruiser? Okay, so this is a picture of the US yield curve, and this should scare a few people. So a year ago, we actually had an inverted yield curve because the 1 month, 3 month, 6 month, and even 1 year was higher than the 2 year, 3 year, 4 year. Now, what's happened is that steepened where it's no longer inverted. As you go along the curve, the rate gets higher and higher. But the ones that are scary is the 5 year, the 10 year, 15, 20, and 30 year rates. They've all steepened significantly. And that should be a concern for people in terms of interest rates. Now, a lot of people have talked about an inverted yield curve is often the signal for a recession. What is more often the signal is not the inversion itself. It's when it uninverts. And then you start to get this bear steepener effect, because what absolutely constricts is when the long-term rates start to really go up. That's when the market starts to get a little bit of concern. So just keep an eye out for that. Interest rates are one thing, but when you track a lot of asset prices to M2 money supply, and so for those at home, this is the M2 money supply. If I took away M2 money supply and didn't have a headline there, you would also potentially believe that this is property prices. Like M2 and property prices often match. And when you have a look at like the low, like we had the GFC, but the low in Australian property, I remember on the Gold Coast in 2011, 2012, people couldn't give away property. But if you have a look at M2, at that time it was falling, just like we had some weakness coming into COVID, but then obviously it's gone up. So what I've been trying to track, and I got Gemini to teach me about all the things that go into M2, is whether things appreciate or depreciate. I think it's actually more connected to things like this M2 than it is other things. And so I'm trying to create a little bit of a model. I spent, 90 minutes on Replit Sunday morning before swimming and replicated a whole trading platform that created little signals, which I should tell you, I tested one. And let me go into this, Interactive Brokers. So I put, it said based on a couple of rules that there was a reversion coming. So I thought I would just test, and I'll have you know, in the last 2 days, I have made $369. So beers are on me, lads.
Was that $369 on a 300 grand investment, or was that?
No, it was actually a YOLO SPY contract, April 17 expiry, 665 call, and also a TLT put option. I lost money on the put option, but this is full degenerate stuff that I fully know.
No, but that's awesome.
So go back to the earlier part of this episode, bitching and moaning about not having time to get stuff done. That 90 minutes on Sunday morning could have been allocated towards other shit. Now, this is speaking of asset prices, this is the prices of diamonds going back to Jan 08. And the post that I saw was finally fake diamonds are starting to have a effect on the market. You can see before COVID, a bit of a trend had started in the 0 to 5 and 5 to 1. Like it had started to trend down, COVID comes along and pushes a huge amount of liquidity into the system. But since the COVID peak of March 22, it has just been dropping. So again, a commodity product subject to competition. I think diamonds are getting their commodity product subject to competition moment now that it seems that fake diamonds are almost indistinguishable from real diamonds.
Yeah, I like that show.
Now, I did raise this with my wife and said quickly before the market falls out, can we sell your engagement ring and your wedding band? Because there's a bit of money invested in that, and then I'll replace it exactly with fake diamonds. You won't know the difference. Would you like to guess the reaction?
And we'll put the cash in this new trading platform I built the other morning.
Yeah. She rejected that advance. That's all I got. I had a philosophy corner, but I then lost it. So, what are we looking forward to?
Easter with the kids, and long weekend of doing some renos around the house. I got to finish our office, so that's my goal.
Listeners will know the office is finished because the background noise of birds will be vastly reduced.
Yes, very true.
But yeah, I'm the same. Looking forward to Easter. We're not going away this weekend, but catching up with a few friends tonight and then on Saturday as well.
You got rugby this weekend, Jack?
No, not this weekend, but next weekend. So body's got a week off.
Day you went? How'd you go?
Like the team, we went really well. They didn't score a try against us. Scored, it was like 40-3. I didn't feel great, so I was cramping in the warm up. But it was good fun to get back out there.
Well done.
Age, you gotta keep staying young, Jack. It's excellent. Just gotta keep those old burns moving. Yeah, I whilst we the goal in the barn is to not use any hydrocarbons in the generator. This year, I think there's something like 8 or 9 motorbikes, the quads, the tractor, 2 mowers. Like it's still going to be a very hydrocarbon intensive weekend, but I'm doing my bit. I'm looking forward to that.
Oh, the farm would be good. It'd be pretty green out there at the moment, or is it dry?
No, it's very dry. I went out last week to do a little bit of watering, so I wasn't so depressed out there. So, and then I've also started another calorie deficit fast program because I needed to do it before Easter, and my wife's family propensity to bring more sugar to kill a flock of rhinos. I'm not sure, but it will be a good test of willpower as well.
Good luck with that. That was like me I'm off alcohol and going to South Start and all this red wine in the vineyards. I'm like, oh, please. But I'm sure you'll feel better for it.
You said it doesn't sound like you are at the moment.
No, I actually am. I'm off coffee and I'm off caffeine and off alcohol. And yeah, I don't actually feel any need to go back.
Oh, that's good. Life sounds good and sad. So that's well done. All right, guys. Good day. We'll catch you on the other side.
Guys.
May the Easter Bunny bring you many treats.
You too.
See ya.
See us.